Hi, Warriors. How's everyone doing? Everyone have their champagne bottles out? Pop the cork. We have a framework. What is a framework? Is it what you put around a painting? Just curious if any of you guys know. But they need each other. China's buying beans, beans up sharply. So yeah, that should give some, I think that's great because, those guys work pretty hard not to have a market after all their sweat and labor to bring in a crop. So I'm happy they have a deal. So we have a blow off, gap higher opening across the board and some stuff, and currency's kind of tame in this environment, but the dollar's a little bit weaker. Yields are up. So let's see what we're going to do this week. And I've been waiting to ask Ryan what I should do. So, I've been waiting all weekend to ask you, in fact, buddy. What, sh-
Morning,
what
mate.
should what should I do? What should I do? Here we are. Here we are, 1650. We're going to crack it here, aren't we?
Are we?
Do you think so?
I have no idea.
All right. All right.
You've got the right question. What do you do? If you like the level, then you short it because you know where your risk is.
Yeah, I did it Friday. It didn't give you much. Give you about 30 pips.
Yeah.
I don't know. It seems like, did it once and it did it again,
And we're going
was that
again.
last night? Yeah, now we're
Yeah.
knocking on the door again. Yeah, I guess you could short it with a 10 pip stop.
Yeah.
But
You know my saying, if it knocks on the door too many times, the door's going to open. Um,
yeah,
but, a level's a level until it's not.
it's
So,
true.
that's that's what trading is. No one knows whether it's the next trade is going to be above or a rally above the level or it drops off from here. So
Yeah.
if you like a level, you trade it and you keep your stops tight in case it does break, and then you move on to the next trade.
Yeah. And
It's
I'm imagining something more like this if it gets through 650,
yeah.
rally, some type of ABC three-wave structure. But that's a big level. Why don't we talk about the yen? Did the yen make a new high for the move? Take out these
Nope,
old highs?
it
No?
hit that high pretty much on the nail, the
Okay.
Takaichi high,
Okay.
which is something I was looking for last week. If we got up to that high, what would happen? Because there was a reason it stopped there last time, and it stopped there again, and it's pulling back again from that high. So that could have the makings of a significant double top.
Okay. So the high up here was 53.27, and we got to what? 53.17. Yeah, missed it by 10. Okay. So we'll see. That would be fine with me. You would think that with the Fed coming in, even though maybe, do you think 100% of it's already, I mean, it's already in the market, right? This interest rate cut by the Fed this week.
Yeah, I think so. There's nothing to do there. I don't think
Yeah,
market's pretty set. Them and the ECB. Looks like the Bank of Japan this week as well. They're going to be
yeah.
unchanged, so it'll be a surprise if they do anything. But they're still in the running for a hike over the next 2, 3, 4 months. So
So that'll really be the key. If we can't, if a double top holds after BOJ, you could really have something
yeah,
there, right?
absolutely,
Because
absolutely.
because you're hearing a lot of talk about, the yen weakness against the dollar, and you're hearing a lot of things about the what's that South Korean currency. There's a lot of intervention going on in some of these emerging markets, or that have dollar pegs.
Yeah.
They're having some problems. They're intervening. The Koreans are.
Well, we've got that big summit happening this week over there.
Yeah.
Obviously, that Trump's going to, and everyone else is going to. So yeah, there's a lot of talking going to be happening there. Everyone's going to be on the what's happening with Trump and China. This is just another TikTok confirmation, you know,
Yeah.
soybeans and all that stuff, or is there something coming that's we haven't heard about?
Yeah. Well, I think the beans believe it. They're almost limit up. The limits used to be 30 cents. They're up 26.5 cents. All the grains, I've been talking about them bottoming for, I don't know, about a decade. No, but recently, more recently, they all look pretty good, even wheat. So, I mean, all the grains look good. But it probably won't show up in the CPI. What do you think?
Not
I mean,
yet.
really, when you think about it, the inflation picture, if a few of these markets, like say crude bottomed and nat gas bottomed and now grains bottomed, they were the tame part of the whole inflation picture. So if they
Yeah.
start to generate embryonic bull markets or bull markets, that's not going to, bring down inflation. They've been the bright spots.
Yeah,
What do you
but
think?
it's got to do a bit more. I mean, you're on a 4 hour chart. You need to be looking at the daily chart or something
Uh,
like that to see.
all right, here's my telescope.
There you go.
All right, there's
So
wheat. Look at that
yeah,
base. Look at these bases, guys. What's the saying? The bigger the base, the bigger the launch into space. That's a nice base.
yeah. But it
Soybeans?
doesn't tell you inflation's going to be coming anytime soon because it's still trending downwards, and that's been going sideways for a year pretty much.
Yeah, this looks like a base too. And corn came off of a pretty big base, trying to turn good here. I mean, you just think that even if there's bear market rallies in this stuff, we went from 8 to 4. Why can't we rally to 6? Right? So, wheat on the Ukraine invasion was $15, 13, with a recent low of 5. Why can't it trade, 7 and then 9? So I think that these markets, they do have ETFs too, like DBA and stuff like that, if you don't want to trade futures. But I think grains are cheap, a cheap commodity. So, and you can't argue with the bases, can't argue with the divergences. I wouldn't short these. I wouldn't short that. I wouldn't short this. Maybe you would against this important level. Look how many times it failed from here. If we get through here, it's going to look pretty good. Could take us minimum to 12. And being same thing, $15 to 950, that's 6. Why can't we rally back to 1250, 13? Anyway, I know we're going to be covering more things, so I thought I'd keep grains on the table because I think they're going to get a little more press coverage, especially if there's no peace deal in Ukraine and Russia tries to take back Odessa. That could choke off grains from Ukraine. So, yeah, what did I say? Gains, yeah. The grains in Ukraine fall mainly in the plain. Wasn't there a song like that? The rain in Spain falls mainly on the plain. All right, so metals crushed, metals crushed. Let's go see where Kman's buying them.
Hello, hello, hello.
Good morning, Kman. Where are you buying
Morning.
gold?
Well, I was saying this morning on my updates, I mean, if you look at the positive vibes that there are now surrounding potential talks, maybe those metals can come off a little more. I mean, I'm thinking about gold, which is usually a hedge against everything that can go wrong. Maybe seeing a little more downside before the week is or before we know what Xi and Trump are going to talk about. If it's just to arrange a deal on TikTok and them buying a bit more beans again, the Chinese, and then the Americans not putting on those extra 100% or whatever tariffs. We're basically back at square one. I think the market will want to see something better than that. So, but in the meantime, yeah, it should not rally too much. Gold, let's put it that way. Silver is trying to break below 47.5, which could trigger another buck and a half or so lower. to start the week. That's somewhere where I am right now. But picking them up, I will have to wait to know what they are going to decide on their APEC meeting. And you were talking about the wheats and the beans and stuff. If they get a good meeting, all those things can rally a bit.
Yeah, that's what they're anticipating, I believe.
Mm. Yeah,
And
but
they're
they need a decent deal for that to really materialize.
yeah.
I guess.
You know, they were going up before a deal. I'm just saying that it'll add jet fuel to it definitely, because there were
Mm.
a lot of news about a lot of these farmers were going to go BK because of
Yeah,
not having China for a market.
yeah, but then Besson said that he's a what is he? A soybean farmer himself. So
Oh, he was, huh?
he's going to save all of them. Uh,
Okay, cool. He's done that. That guy's done everything.
yeah,
Currency trader,
he's a man of
bean trader.
many jobs.
He's a Renaissance man.
Mm, yeah. Well, that's
Okay,
what the people is the
uh,
people are hoping for. Yeah.
okay. So how do we play the BOJ this week?
Nah, they're not going to move anything. I'm
We
not in dollar yen. I'm still long euro yen. I let some go around that prior high here 177.80 while I was off on Friday. I just had an order in, got paid out of some. But I'm still running a little long. I don't think we expect anything from the Bank of Japan this week, but as I was also saying already a number of times, I think it's probably a bit underpriced for December. But there's still a month and a half or so to go, right? Before we have the a good month and a half to go before we get the December meeting. And running into the meeting, I think that then there we may be looking at something from the Bank of Japan. Now it's a bit early after Takaichi's election, and they're still putting plans and stuff together. I don't think they will do something. They also a bit of rumors out last week that they were going to wait. So yeah, I'm siding with the majority. I'm not sure that dollar yen can really push on a lot from here, but the crosses remain big. So that's still my
you,
things that
you
I'm
know the euro yen is the leader, is the strength.
mm,
I thought Aussie yen would be weaker. It's actually
catching up.
yeah 78.6 we're trading at right now. So
It's catching up.
I said I would sell at all three retracements. So
Mm,
I did it again last night, wrong over the high.
mm.
Um, but the
Yeah, I
guppy,
mean,
so I've been watching the guppy since I've been in
mm,
my trade selection wasn't good on the yen cross, and this guppy, it just can't make any progress. It has
yeah,
the ugliest structure of the three.
yeah.
So for
Mm.
guppy traders,
I would, well, personally, if somebody would like to trade a yen long from the long side, I don't, but this is the pair. I think because I think sterling may just trade weaker going into the budget, but it's going to be as we see this euro sterling as well. It's a slow process, right?
yeah.
And but the problem is with that cross sterling yen is you're looking at a sterling at a 4% currency and the yen still only 0.5% or something, and it's still tough to be long yen for longer because if you want to keep it for longer, it's the funding is going to bite at one stage, right? You're paying away money to be long yen versus most of the currencies, Swiss being an exception. But yeah. Mm.
Yeah, so I mean, I hear that from everyone brings up that point that you have to pay the carry on
Yeah.
the end. So why doesn't that bother people when they do the carry trade with the end?
Well, I mean,
And
they're
there's
getting money
billions.
because they're getting money. If you're long Mex yen, if you're long if you're long I don't know Aussie yen, even sterling yen, euro yen, you're getting paid for it.
Oh,
To,
you're
to-
collecting, you're
that
collecting
is
it.
a carry
Yeah.
trade. That is the carry trade. But
Uh,
therefore, you need
they
normally
have
an
to
agreement.
unwind. That's unwind.
You need an economy that is like zooming along at a good, not exceptional necessarily, but at a reasonable good pace to everything needs to be well in markets to really jump in the carry trade. We've seen that after the COVID, right?
Yeah.
When America was buying loads from Mexico, things were bottoming out. Interest rates were bottoming out, and that's where really the carry trade had its most traction. But there's a difference in carry trade and just playing long, I don't know, some currency against the yen for a week or two, that's not a real, I don't qualify that as a real carry trade. A carry trade, you enter, you build, you enter, and you stay in it for months.
Okay. All right. Anything else you want to share right now? It's on your mind?
Well, yeah, I'm still, what am I? I actually am a little long Aussie from last week. Well, I've been long Aussie for a while, but then last week I re-entered. Looking a bit better, also helped by
Yeah.
RBA's Bullock not being dovish at all. She's back on more onto the hawkish bus, and then helped by better stuff going on between the US and China are also helping
Yeah.
it. But I don't have big convictions. I am running for a while now. I'm running a bit short on China because I think, but it's just a personal opinion that China is going to come out, whatever happens, on the winning side of any trade. And maybe we see a bit more investment back into China, which could bring China closer to, I don't know, 705.
Okay. Yeah. Big gap. So
And
this is a
the interesting
response.
one. The interesting one there is that it's been capped for weeks now by the daily Ichimoku cloud.
Yeah.
And yeah, that thing is coming down regularly as well. And it can't get into it. Every time we try to get into the cloud, it's been rejected. So that's helping as well.
Maybe it's going to rain.
Maybe it's gonna storm.
Yeah. Yeah. Those clouds get full of moisture. It's
Exactly.
tough to break through unless you're in a jet, right?
Hmm. Yeah.
Anyway, I was going to tell you guys one of my fighter pilot stories, but I'll save that for another time. I've kept it a secret a long time. How
Save
you
it
doing,
for a
Blake?
rainy day.
How you doing, buddy?
Good morning, Coach. How are you? Happy Monday.
Yeah, next week you get an extra hour.
Yeah. I know, and you're still screwed, but
Yeah.
you also live in California, so
uh, and
so
very, very nail-biting Mississippi's Ole Miss game on
against OU,
Saturday.
yeah, that was a huge game.
A great game.
Unfortunately, I went to the ASU game, and that was not the prettiest
Yeah,
game in the world. So yeah, it's
yeah.
been a weekend of college football, that's for sure. So
All right. So how do we make money so we could, just, waste our time watching college football every Saturday?
well, there's obviously a lot happening this week. Four central banks, the Fed, the Bank of Canada, Bank of Japan, and the European Central Bank. So, two of those central banks, one of them being the FOMC, is going to be cutting rates. The other one being Bank of Canada, more than likely anyway, with both. And then obviously we got earnings this week. We've got earnings from Microsoft, Meta, Google, Amazon, Apple, Caterpillar, Waste Management, a lot of energy companies, Visa, I
Wow.
think, MasterCard. So there are a ton of earnings this week. And then we at the end of the week we have uh, Trump and Xi to sign off on all these soybeans, and who knows. I think what we're going to be looking at is what tariffs get removed from what's the tally at Ryan Kman, 130% tariffs on China, is that what?
155, 140, whatever Trump decides on the day.
Yeah, wherever we're at right now, I know it's higher, and so what's going to get removed is probably going to be pretty key to how the markets respond. And with all that being said, it's a huge week this week, and obviously we started off with a gap higher, so we're gapping up at the 127% extension, broke out in all-time highs. This is obviously a breakaway gap. And if you look long term, this is the long term, like long term. This is my weekly chart going all the way back to 2018. This is channel resistance. And we've sat here and looked at that chart many a times on the show, wondering exactly how we're going to get here. And now that we're here, the question is, where do we go from here? And this could be an acceleration phase higher in the markets. You hear people talking about the market's in a bubble, and there's a lot of parallels to the late 90s, but frankly we don't know where we're at in that bubble cycle. As the Fed's cutting rates, if we are truly mirroring a dot-com cycle, we could be in the late 90s, with still some juice to go here, as we were in the late 90s, where the market was just like, wow, I can't believe we're still going. So we're up at resistance right now, and but I'd be very, very careful with trying to fade this stuff. I mean, I know we're at big resistance here, but this is a big week this week. So what happens this week is going to be very, very interesting and telling. So for right now, I mean, support in the market is around 67.80, I think, is the breakout point. And as long as we remain above that, I mean, it's bullish. I mean, this is a big break higher. And I know Kman was just mentioning a little bit earlier, this move in gold and silver. I mean, it looks pretty nasty. We're about ready to break the 4,000 level, or we're getting close in gold. In silver, I mean, the head and shoulders pattern still has a lot of distance to travel before we even reach that target. But Dale, that's about the nastiest throwover you can find in gold, isn't it?
Yeah.
I mean, it's an ugly one. I know the double top target's just below 4,000, but up on an escalator, down on an elevator, so it looks like. So
Silver was easier because the pattern wasn't as strong. See how, yeah, it was a
yeah,
little
we had
easier.
that lower high and
Right.
head and shoulder pattern, and you're right that the gold silver ratio had turned and really clued you into silver, but still they both precious metals
Yeah.
trade extremely
Yeah.
heavy,
Yeah,
so
they do.
they
I'm
do.
thinking 3,500 in gold over the coming weeks
That
or months.
that wouldn't be surprising to me. I don't think it'd be surprising to anybody here, really.
Yeah.
Just a retest of a breakout point. I mean, the 50 DMA is going to be a big test, as it
Yeah.
is, because
Yeah.
that's kind of contained price for so long. You can see how, I guess going the entire year. I mean, yes, we've gotten below the 50 DMA, but not aggressively. So.
In my research, it was forecasted by a couple of guys I follow that this would be the fifth wave, complete this first wave down, this break this week, and then we get a bounce to correct this recent decline. I think that those will be nice market setups.
Yeah, well, it's definitely a lot of volatility going on right now. Well, a couple things I think we should, I know we talked a little bit about earnings. I want to just take a quick look at some of these big names. Like, look at Microsoft. I mean, Microsoft is at, major channel resistance. We had a little bit of a false breakout on the earnings from couple months back, and we're sitting right up against the highs. It doesn't want to really back off. You can see Google, stretching to new all-time highs, 261% extension, long term. This is the long term 261% extension that we're reaching for. still very bullish though. And let's see, we got Amazon and Apple that we should probably take a real quick look at. I have them over
You
here somewhere.
passed it. There
Oh,
it
yep.
is.
Here's Apple. So Apple, obviously new all-time highs. This has kind of surprised a lot of people. That we've broken out, and we're still. This is a weekly chart, obviously. I mean, if you look at where we could go on a just from a channel, I mean, we could trade up another $20 if we want. And then Amazon as well. I mean, Amazon's holding up very well as we head into holiday season, and I would argue that this is a 38% retracement, if even that. So, and this is on a weekly basis. Yeah, it's about a 38% retracement. So very shallow. I mean, you look at the, just some of the Mag 7 components that you see there, they all look pretty darn good. And then, Meta as well. Meta, yeah, I mean, pullbacks have been kind of minor. So you could argue that this is actually more of a flag pattern than anything, I would
You,
say.
you could look at mags, and it's the whole Mag 7 chart.
Yeah, I have
MAGS.
it as something a little bit different. I have it as I put it together myself a long time ago. It's
Oh,
this one. So, but yes, it's the same, basically the same thing.
that's Fang because you have
Yeah,
Google.
no, that's the Mag 7. So
Oh,
that,
okay.
yeah, it's
Oh,
include
Google.
all
All
that
right.
stuff. But still, I mean, look
Got
at,
all of them there, huh?
yeah,
Okay.
yeah, you just kind of throw them all in a bucket, and then that's what you get. But anyway, I mean, risk looks strong right now. I mean, you can't really deny that. And I don't really know what to make out of the dollar. I mean, I think we're going to get a little bit better indication with the dollar this week. Euro's like right in the middle of a triangle consolidation. We got both the ECB and the Fed this week. So let's turn it to Ryan and ask Ryan, what are you looking for today? I wasn't able to listen to the whole flow show. I just listened to some of it live
What?
today.
What?
I know. Well, when I tuned
Bless you.
in, I only got to listen to like half of it, or maybe even last 20 minutes. So,
Yeah.
so tell us, what are you looking at this week, Ryan?
What am I looking at this week? It's going to be a busy old week with the central banks, but we're not expecting many shocks from any of them. We've got the Bank of Canada Wednesday, Fed Wednesday, ECB Thursday, Bank of Japan Thursday. So unfortunately, there's no surprises that are likely. The only one that might throw up one is the Bank of Canada. But
And well, you know what? I'm going to ask Kman what he thinks about the yen. So just continue on. Sorry, I didn't want to interrupt. Continue on.
yeah, no worries. So dollar CAD could be pretty interesting if they do pull a rabbit out of the hat and stay on hold rather than cut. We're probably going to see a decent dip in this one, and so I'm picking out a couple of levels on this one, 38.66 ish, which I can't read your text is about. It's a bit further down. So yeah, that I'd consider potentially buying a dip in that one if they stay on hold, depending on what the dollar's doing elsewhere, of course.
Trump threatened Canada and said all talks were off at the very end of the week last week, and that ad that Canada was running, or it wasn't, it was a province of Canada was running that ad with Ronald Reagan showcasing him and him talking about tariffs and how it'll destroy a country. So he got really upset, obviously, and said the Canadian talks are off. But then, Canada removed those ads. So I wonder what's going to happen with the US and Canada now. So he got what he wanted,
Yeah.
Yeah.
Yeah. So
I'm surprised. I'm surprised we haven't seen the market's obviously ignoring it a bit because with all throwing these extra tariffs on, and what usually you'd see the Canadian dollar weakening, the dollar rallying. But apart from the blip we got on Friday, it's not done that.
yeah, it's been fairly quiet. And I think the Canadian dollar is probably rallying with this, commodity rally. I mean, you got risk rallying just all the way around. I mean, you got Aussie, popping, you got Kiwi, very well supported in this channel. Canadians just come off a little bit, and obviously the stocks are at all-time highs. So I don't know. K-Man, what are you thinking about the yen here? I mean, we got the BOJ this week, and obviously the as you pointed out, I think in the European maybe you did it or Ryan did it. The Takeachi did I pronounce your name right?
Takaichi.
Ugh.
Takaichi.
Yeah, Takeichi. God, there you go. Anyway, recent highs. So what do you do with the yen up here?
With the dollar yen, as I said, I don't do anything, but I'm still long euro yen. Don't change a winning team right now. If the Bank of Japan won't do anything this week, but then we have a bit of a chatter. Takeichi and Besant, not Takeichi, Katayama and Besant actually spoke today, but we didn't see too many details of that. Just that they will continue their cooperation. Takeichi should be talking to Trump later in your day, so tomorrow morning Japanese time. I don't know whether they're going to say much. Trump, well, they kind of they will be signing something apparently, but we are not sure about how many details there will be, especially in that $550 billion investment that Japan is supposed to do in the US. No, I think it's just don't change anything right now. I'm as I said, I'm not overly sure about the dollar, even if dollar yen is obviously the major instrument, but those yen crosses are still big enough to keep the position right now. I have tightened the leash door on that euro yen. If it goes back below 176.60 or so, I don't want to be long anymore. But um, yeah, until then, I've got a real longer term line coming in somewhere very close to 180 now, and that I think we could see it maybe this week before the week is over.
Yeah, it does look pretty strong. All right. Well, Dale, I know you have an interview coming up. I just want to say, with everybody here, just keep an eye. I think you got to keep an eye on this euro. I think the euro's in a consolidation. We're getting ready to break out. I don't know if we're going to break out this week. My assumption would be that we break out of this consolidation. Remember, we did have a false breakout up here above the 118.50, if you will. I still think the risk is that everybody's leaning into dollar weakness and expecting the euro to trade back up to 120 by year end. So I still think that the downside is more the risk at this point, especially if the dollar firms up with an FOMC that is maybe not as dovish as the market would hope. So Dale, I do want to pass it back to you. Is your interview here?
Yes, I made you host, so you have to promote Michael Berman.
Actually, here I'm gonna make you host.
So
there you go.
Thank
but
you,
I
bro.
can try to grab him as well.
I got him.
You got him? Okay.
Well, hold on. I'm going to move him.
Okay.
Come on,
Oh,
come
yep,
on
he's
over.
on.
Come on over, Michael. How are you? You're rejoining as a panelist, so should be here in a second. Okay, we're good. So Blake, that Peter Brandt only recommends a few guys in FinTwit to learn from, and that he believes in, and Michael's one of them.
Awesome.
And
Well,
then,
welcome to the show.
Yeah, that's a pretty good endorsement as far as I'm concerned. Peter Brandt. He's a pretty straight arrow and one of the best classic technical traders in the last 40 years. So anyway, that's Peter, and Jack wrote about him. So Jack put him in the new Market Wizard. So Michael, welcome back. I know you're in Australia. What time is it now?
Thank you very much. Thanks, Dale. Daylight savings now, it's 25 to midnight. So
okay, you're burning the candle tonight.
it's all good. I'm going to share my screen if that's okay with you.
Sure, go ahead.
Okay.
What have you been up to? Is this what we're going to find?
Well,
All
yeah.
right.
Thanks very much for inviting me back. It's been a couple of months since we've spoken.
Yeah.
I got a couple of things that I can touch on. So do you mind if I just jump around and share what I think might be of value to your audience?
You're free. You have
I'm a free man.
freedom,
Okay.
freedom to express yourself
Okay,
and
I like
views
that.
uncensored. I may
Okay.
interrupt you a few times.
No, no,
That's all.
please do. Just fire away some questions.
All
So,
right, go
so
ahead.
something um, was bugging me on over the weekend and I thought, okay, this morning I woke up and I thought I'll write about it. So, I write a daily global macro newsletter. It's free, so feel free for any of your listeners to read about it. But basically, the subject I chose was mess something up here. I've managed to mess something up
The
in
narrative
my
of a lot
eagerness.
of the narrative of a lot of cash on the sidelines to come into
Okay,
the market.
there we go. Okay, so
Okay.
basically, um, everyone's a lot of commentators were saying there's a lot of money on the sidelines, and they were kind of implying that it's going to hit the market. And um, one of the reasons that was driving it was the on repo, reverse repo, basically as the facility has gone away. So it stood at 2.5 trillion. When was it up to 2021 on the back of all the
Yeah.
stimulus that came with the pandemic, and the Fed has been purposefully they've been applying what they call quantitative tightening, QT, and they've achieved their goal. So they've the facility's basically empty. Now, on the flip side of that, there's the $7.5 trillion of money market funds. And because, just for some of your listeners or who may not be familiar with it, typically what happens is money market funds that have they've got excess surplus money invested, they would put that money at the Fed in the reverse repo market because it was paying a very high interest rate relative to the Fed funds rate. Anyway, the thinking now amongst many analysts is saying, well, this money is now going to be put to use. And I just have to quote John Hussman, who I think is one of the great thinkers out there. And what most people miss is there's no such thing as money going into or out of the market, only a change in who holds it. So I don't want to go into the whole mechanics and the internal plumbing of the monetary system. You can read the article to get a better feel for it. But there is no increase in money. All that happens is it changes hands from one holder to another. And what I feel about this particular argument is that while John Hussman might be correct, and he's pretty technical as a former professor and all the rest of it, he's 100% correct in his statement that there's no new money that's being created. But what can happen is, and one can't dismiss this, is that there could be an increase in the velocity of money. So while there might not be any new money, money could pick up. And he has a chart of the velocity of money, and basically it has been going up since the pandemic. So I mean, that's a whole thing on its own. I just wanted to touch on that. You shouldn't fall for the headline where they say money on the sides is going to be put to work.
So that's
It's
a bullish
no.
narrative to scare people into the market because
Correct.
they're going to be left behind. So they're
Correct.
trying to create FOMO, and you think that would
Exactly.
be in the wrong course of action.
Exactly. And in many cases, people just don't understand the mechanics of the monetary system, but there's no new money being created. So that's a misnomer. If I can just move this
So one of
slide.
our attendees said, "So how do you explain the increase in M2 if there's not new money being created?"
So that's the M2, because basically there's been quantitative easing over the last 20 years.
Millennia, it feels like.
Yeah, I didn't include the M2. Yeah, I didn't include the M2 chart here. I did in another article where you do see it. It's been just going up. And in fact, what I'll do is I'll just show you just on that very point, central banks. If you give me a second, I can show you. Here's your M2 money supply. So yeah, this is a function of increased debt and that working its way into the system. So
Okay.
In terms of the reverse repo, it has zero impact on money supply. Okay.
So what is Michael? To me, my wheelhouse is as a trader and not a macro guy that understands the plumbing like you do. I'd have to call a plumber. I'd have to call you. I sometimes I can change a light bulb, but can you explain to the audience what has been going on for a while with the repo market and the huge sums of money coming in? And then the SOFR rate shot up, which implied stress and U.S. dollar demand.
Yes.
And then it came down rapidly. What the heck is going on with these operations?
Okay, so let me just show you here. I think I've got a chart of it. Here we go. So let's look at the red line. The red line is the repo market. So that's what happens when the banking system needs to borrow money because it's got a liquidity crisis. It goes and borrows money. Now you can see there've been. I don't have a longer chart than 2023, but typically you don't see these big spikes. These big spikes tend to be associated with a little bit of a liquidity crisis. And what happened about 10 days ago, so there was this regional banking fear that things were getting out of hand because there were some bad loans. So you can see it actually shot to $8 billion. Now, 8 billion in the scheme of the whole thing doesn't seem all that much, but people only come to this particular window to borrow money if there's an emergency because it's more expensive, and it doesn't happen that often. And you can see there aren't that many red spikes. So yes, there's something going on.
It doesn't look good either that they have to do that, right?
Exactly.
A lot of it's their image.
Yeah, 100% right. So they don't normally do that unless they really have to. So there was concern that there could be a potential regional banking crisis. I don't have that particular chart on my system right now, but it looked very vulnerable. I think the ticker, the ETF is KRE, if I'm not mistaken. But anyway,
you're correct. You're correct. It is KRE.
What I wanted to just quickly show you, and I'll come back to some of these slides, is last week I was in Melbourne and I gave a talk on backtesting biases to the Australian Technical Analyst Association. And I'm just confirming you can see my chart is my screen. My desk. Okay. So this was a 1-hour presentation. I won't bore you with the details, the granular details. And I'm also a little bit nervous that some of your audience might not be quantitative or systematic. I might be talking to very much a let's say discretionary audience. So I won't belabor the point, but basically my talk was around the following issue: is most back tests are unable to replicate themselves in real time. And I'm sure you've all come across traders that have shown you these unbelievable backtest results, and you're scratching your head. It doesn't seem possible, and invariably it doesn't work out. And it's not just a problem of let's say the financial trading community. It's very much a problem with the broader research community as well. But here's some practical examples. Some of your viewers or your participants would probably have come across this, and I just want to highlight biases. These biases are applicable probably even more so in a discretionary environment as well. So what symbols should I include in my strategy? So you've developed, let's say you've developed a momentum strategy, and now, what do you include? What time frame do you use? What look back period? All these kind of things are important decisions. What tends to happen is people only make these decisions after they've run numerous back tests, and then they cherry pick the ones that have worked. So basically, I'll come to something very practical right now. My approach, I believe the only way to counteract this is to use a integrated framework that basically is able to store every single backtest trial that you do and score you across the whole gamut of all the trials, because what tends to happen is you cherry pick. And I'll just I've come up with a whole I've lent on the back of Marcus Lopez de Prado, who's a very famous quant. He currently is the head of the quantitative R&D at the Abu Dhabi Sovereign Wealth Fund. It's got over $1 trillion under management, and he's a top academic in the space. And he's come up with a number of different formulas which I've incorporated into a backtest framework. But I'm not going to go into the detail. I just want to show you one particular example where I think it highlights this quite well. So basically, here's a strategy that I've run across 23 different symbols. It's a 200-day moving average across all these symbols. Okay, the world stock markets. And over the last 25 years, it hasn't done particularly well. This particular strategy, it's made an annual return, call it, of 2%. So without going into all those details, if you look at the underlying of all those 23, if you look at the individual backtests of all those 23, you'll see a number of them that are actually quite good. Some are making 326%, 320. So what people tend to do, I see it over and over again, is that they look after the fact. They say, okay, well, here's the three that I like, and here's my back test. So now they've taken 3 out of 23, and they've got a more favorable back test. What you've done here is there's a selection bias. You've cherry picked, and anyway, in terms of my framework, it helps discount these kind of things and normalize it so you can score and get a sense of how much bias is in your back test. But I'm going to move on from here because this, as I said, this might be speaking to the wrong audience for that. But I'll just speak a little bit about the markets because that's what you guys were talking about.
Yeah, I mean, I'm interested in what your bias is, if you have one, or a narrative for a market making new all-time highs, and they're really not being cash on the sidelines. It's just changed hands.
So my views. So I typically look at valuation first, and I like the Schiller PE. So very simply, the red line, the red axis here is measuring the Schiller PE, which is basically taking the rolling last 10 years of earnings instead of being more lumpy. And you can see that except for the period at the dot-com bubble, we're at the highest levels we've ever been. So the markets are very expensive. So that's my first concern.
People say that.
My other issue is, which maybe I'll talk about in a second, is the AI phenomenon. So a lot has been driven by, as we all know, the AI phenomenon. and I think it's got ahead of itself. I'm not alone. Many people are calling it bubble. So if you put aside the pricing of the AI and all the rest of it, I just want to focus for a second on what I think is going to happen to jobs. Like, I seriously believe that the impact on jobs is going to be quite profound. And I try and speak to as many people as possible.
How about your job, Michael?
Well, what's been amazing for me is I've founded and exited over 5 different fintech companies. And so I'm used to employing a lot of people, programmers and so forth. So this is my great use case. I'm glad you asked that, Dale, is I'm currently writing some software that I hope to be able to launch in December. And I've been working on it for about a year and a half maybe. And it's just me. Prior to this,
you would have needed 20
we had an
people.
office in Kiev with 35 programmers for a previous company and I know for the project that I'm doing at least 15 to 20, and it's not because I'm a crap programmer, to be honest with you, but I'm using the tools available to me at the moment, and I'm paying 20, maybe $50 a month to having some of the best programmers working for me being AI. So I do code, so it helps because I think there are many traps that you can fall into if you know nothing. But a guy like me who's been around the block and has done this a number of times, it's a game changer. And I know that a lot of the guys who used to work for me cannot find jobs at the moment. They're, let's say, middle-level programmers, some with PhDs, and I've got a guy with a PhD in nuclear physics. He's struggling. He's in Germany. He's struggling to find a job. So, he's not working in nuclear physics. He's working in programming, in financial market programming. But yeah, I think it's going to have a big impact. In fact, when you just look
so getting a gig as a security guard is going to be a great job.
Yeah,
absolutely. Oh God, go ahead.
So I mean, look at this. This is the S&P 500. Yes, it's a linear scale, but so it might be a little bit more dramatic. But you'll forgive me for my scaling here. But you look at this chart, and if you don't think this is
parabolic,
yeah, then but it's very hard to call. So in my newsletter, I've been saying I've over the last 3 months, I've put 2% of our equity into puts, long dated puts. I'm underwater at the moment because the markets over the last, there was a little bit of a wobble recently where I thought, maybe that's it. But
it wasn't.
I'm cautious. I could not buy this market at the moment, and I'll just show you what I'm recommending. I wanted to show one chart before that price journey. I just wanted to show you the US. Everyone's talking about the US, but if I look at a couple of exchanges across the globe, for this year at least, the US is underperforming these other indices. Yeah, so I mean, the US has done a lot over a number of years. So here's my calls that I'm making at the moment, and I've been pretty consistent with what I've been saying for in some cases for a year or two. But so my first call is I would, if you're going to have exposure to the S&P 500, I would switch from the market cap, which is your classic traditional S&P 500, to the equal weighted index. And I think the best way to look at it, because I've used, I used dual axes here to show it independently, but the best way is the ratio. And the market cap version based on the Magnificent Seven and all those other interesting tech plays have driven this market way out of kilter. So I'm a reversion to the mean kind of guy. I always think things come back to normal over time.
Equilibriums.
Very hard to time it. So, you know, even though I've put 2% into puts, these are way out the money puts, long dated. They're June expiries for next year. So if I get it, you know, if I lose 2%, it's insurance, but it'll cover. But yeah, so here's one trade idea that I've got. The other one that I like a lot is, and this one I've been pretty vocal on, and I nearly got stopped out, is I'm long China, and I'm using the Hang Seng as my proxy. I was just too nervous to use, and maybe based on my thesis, maybe one of the Shanghai exchanges would have been a better one. But yeah, so what I'm betting on, I put this trade on over here, so it's already over a year old. Basically, I'm saying China's going to outperform the US on a relative basis, and we won't go into the whole macro story. I just believe that China's going to play the long game, whereas the US will be a bit more reactionary. And it's interesting. No one in your conversation earlier brought up the fact that the US government is in shutdown for weeks now, and people are going to miss a paycheck. It's not even on the it's quite amazing. It's like not even on.
You're right. It is amazing. It is amazing.
I mean, that's a big thing.
Yeah, it is a big thing.
So yeah, I'm betting that this ratio is going to come all the way below the mean. Yeah. My other trade that I like, and
so you do mainly relative performance type trades, pair trades.
Yeah, at the moment I'm taking longer term views, so I'm not that active with my trading. Like whereas you guys are looking at shorter term charts, and I'm nervous. I'm also doing a lot of, let's say, call it optimized portfolio allocations, that type of focus. So it's more longer term. It's like the 60-40 traditional portfolio with a tweak, that type of thing. But what I do like is healthcare versus the S&P. I think healthcare is very defensive. People are getting older, and you know,
right.
I see this ratio going down. Yeah, so that's another relative bet.
So Mike, why don't you show people where they can get involved with you and how they can?
The best way, I'm not very good at marketing.
Navigating.
Yeah, let me.
Just put your website up.
S2N. What is my website? No, Signal to Noise. That's me there. Signaltonoise.news. You sign up. It's free, and very happy to talk to anyone. You know, you'll have my email address once you've signed up, and very happy to engage and share whatever I can on that. I know we could probably run in short on time here, but just one that has been, I've been very vocal on this. I believe Michael Saylor is a charlatan, and I think the whole micro strategy is going to blow up. And I'm not. So I've been a buyer. I've been in and out of Bitcoin for the last. I bought my first Bitcoin in 2012. So I've been a long-term in and out of Bitcoin. But once again, like I find it, I don't want to make a call against Bitcoin, because I think one should have a very, very small portion of your portfolio. I've said around 1 to 2%, not more. But people who've been sucked in have all gone for this, or not all. A lot of people have gone for this micro strategy, and I really think what you're going to see, this ratio is going to go way through the top here. So I'm not a believer in the whole micro strategy thing. I think the average, I'm going to get it wrong now. So it could be, after all these years of buying and all the billions he spent, I think his average price is either $79 Yeah, I think it is. It's
Yeah.
called at $80 is his average. So anyway, we'll watch this one closely. And
Yeah, you're
my
not the
last,
only one. You're not the only one that
good,
I
good.
think Jim Chanos you have in your corner.
Yeah, I'm a great fan of Jim Chanos.
Okay.
One last call from my side is I'm a believer in like the yield steepener. I just, with all the debt that's still out that the US has to fund and roll, and I don't believe inflation is I've got a chart of inflation if you're interested in seeing.
Yeah.
But basically, my trade is that the long end of the curve is going to go up. You've seen it. So this is the 10-year over the 3-month, and already the 10-year over the 2-year has gone up. And I see this continuing. You mentioned, one of your previous guys spoke on, I use this chart. I find it really incredibly accurate at predicting what the Fed's going to do. It's the 2-year over the Fed fund rate, and basically we're slightly below this, which tells me the Fed's behind the curve. So it's likely that the Fed is going to drop this green line in line.
Yeah.
Basically, I call the 2-year the
How long have they been behind the curve? And what's the repercussions, even though they're cutting now?
I personally don't think they should be, because I'm very nervous about inflation.
Inflation, yeah.
Yeah. So
well, he's not Paul Volcker.
Yeah.
We found out, right?
Yeah. So yeah, we're sitting at 3%. It's still way above. Anyway, it's way above the inflation target that they've got. And I know you mentioned like wheat and the grains could be bottoming and all that kind of stuff. Cost of living is very high. So people who've got jobs will certainly be looking for increases. My only concern that I have with my thesis on inflation is if there's this massive job destruction that comes through AI, is I can't see the inflation. So because without jobs, I'm not sure there'll be the spending. And so yeah, like I think people should not underestimate the impact that AI is having. I've spoken to a number of law firms, and they're telling me that slowly they now adopting more. I think these law firms are very nervous about privacy, and they've taken their time about whether they can deploy it in their companies. But basically, you cannot not embrace AI if you're a large organization. You just got to be smart about it. There will be, there still will be a need for jobs, certainly in the middle to higher level jobs, because you still need someone to look over the AI to make sure that it's doing the right job. And you can't do that if you don't have experience. So I think, Dale, you and me probably still got some value left in us, but it's pretty scary. I read a book while I was in Melbourne on the weekend called Scary Smart, and it was by one of Google's senior engineers who left, who was involved with the whole AI revolution. And like he's dead scared about where we're heading with this. So I think anyone who's got a job should value it big time. Okay. Sorry to scare you.
Good advice. Good advice. Should value it.
Should
value it at all times, as long as it's not an exploitive relationship. Yeah. And that's a wrap, Mike. Great.
Yeah.
Thanks for staying up.
Not any a pleasure.
And we'll talk again like in January.
Great.
And you reach out anytime. Anytime you need anything, just let me know. And everyone, you could follow Michael on X at S2NN.
Signal to noise. .news.
Yeah. but it shows up as S2NN new
Oh,
EWS.
on my Twitter handle, yes, yes.
Yeah. So I'm giving them that.
Okay,
and
I've got to get more into the Twitter bit. I'm scared of Twitter, but
okay. Well, you
I
know
know
what?
you're a master.
You're a man of faith. Don't have no fear. Do not
I have no
be
fear.
not afraid, Michael.
Be not afraid when Dale's near.
Be not afraid because God is near.
Yeah, 100%. Thank
All
you
right,
so much,
brother.
Dale.
Take
Thanks,
it
everyone.
easy. I'll see you, man. All right, that's a wrap, everyone. Could join the team in 10 minutes. Don't just count your money supply, count your blessings. Adios.
Yeah.
Thanks, Mike. What did I? Yeah. You're welcome.